Big Sky Studio.
The Nifty and the Sensex snapped their three-day gaining streak on Friday to end in the red. Financials were the key laggards. However, for the week, the markets ended 2% higher, with metals and ITC leading from the front. Hello and welcome to a fresh new edition of Taking Stock. We are coming to you, of course, from the CNBC-TV18 Big Sky Studios. This is the show where we will tell you what has happened in the last 5 trading sessions, but more importantly, try and prepare you for what lies ahead. I'm Prashant. With me over the next 30 minutes, my colleague, Reema Tendulkar. Reema, hi.
Hi, Prashant. Then here's what we've lined up for you on our show today. To discuss the week gone by, we have Ajay Srivastava of Dimensions Corp. And for technical cues for the week to come, we will be joined by Jay Bala of CashTheChaos.com. In big corporate voices, we have Abhijit Roy of Berger Paints, Umesh Revankar, MD of Shriram Transport, and Amitabh Chaudhary, MD and CEO of Axis Bank. And as always, we'll get you market opinion from a whole host of experts that we spoke through the week, like Sunil Singhania of Abacus Asset Management, Dan Feynman of Credit Suisse, James Sullivan of JP Morgan. But before that, a quick word on how the markets panned out this week. First, the dip that we had on Monday, then the recovery on Tuesday, Wednesday, and Thursday. On Friday, it appeared to be a session of consolidation, but by the end of it, in the last half an hour or so, we did see the markets pick up. By the end, the Nifty was up 1.8%, the mid-cap index rallied close to about 3%, and we participated in what turned out to be a global risk-on. So across Asian markets as well, we had gains of close to about 1 to 1.5%. But let's take stock of individual names and which stocks did well, which underperformed. Nigel is here for the movers and shakers of this week. Nigel.
Well, it was a good week actually for the Nifty as well as the Nifty Bank. Both of them did well, but the real outperformance came in from the broader markets. Both the mid-cap and the small-cap indices, they put on 3 to around 4%. But let's start off with the frontline stocks then. Some of those metal-related stocks, they bounced back. Ferrous and non-ferrous, Hindalco did pretty well in this week. In fact, it was one of the top gainers. But the reason that the markets moved up was because of ITC. They have got an analyst meet that is scheduled for next week, and that stock, in fact, was buzzing ahead of that. Asian Paints as well bounced back post the clarification that came out from the management. Various questions being raised, and in fact, that stock did bounce back. ICICI Bank as well was up close to around 5%. A couple of ferrous names, well, JSW Steel and Tata Steel, they were up close to 5%. The reasoning being was that price cut, maybe it was lower than expected, and maybe prices are now bottoming out. So that explains why both those two stocks did well. Bajaj Finance as well was up nearly around 5% odd. On the flip side, we had a few losers. Divi's Laboratory has corrected from around 5,500 bucks to around 4,500. This week was under some pressure. You had IOC as well as Cipla. Both of them shed some weight, down 2% apiece. But the real story was in the broader markets. So let's start with those big gainers. Vodafone Idea. The street is now factoring in that there could be a 3-player telecom market, and that's why that stock did well. IEX did bounce back, and Delta Corp as well is bounced back. Maybe the new variant of COVID will not be as deadly as earlier feared, so that one did bounce back. Siemens from the capital goods space was one of the big outperformers. In Granules India, plenty of speculation out there, but that stock as well was up more than 10%. And JSPL, valuation-wise, well, the cheapest among all the ferrous names. So that stock as well did bounce up. Management commentary as well was fairly positive. On the flip side, you had some losers. SBI Cards, the fear is people will swipe more. Maybe they'll not earn so much. That's the fear, at least as of now. The stock was down 7%. Strides, the last couple of quarters have been disappointing. The stock was down 6% odd. And Dr. Lal's Path Labs as well as Whirlpool, both of them were down close to around 5%. So a good week for the markets, with the frontline index up close to around 1.5% to 2%, while the broader markets did perfectly well. Back to you guys.
Nigel, thanks very much for that. You know, just a quick word in terms of things to watch as we come back next week. Technically speaking, the Nifty is left off around the 20-day moving average, which roughly is around the 17,500 odd mark. Give or take, I think 10-20 points. So this becomes important. I mean, in terms of a pivot, it's a 20-day, which will need to be watched. 3 weeks to the end of the year. And what happens? Every year, as we head into late December, liquidity thins up, especially as market participants and especially FIIs, they go on holiday. Happens like clockwork. It's expected this time as well. What is different is that there is this expectation that as, one segment, the FII segment thins out, it'll be more local driven, HNIs, local mutual funds, participants, etc. And some of the overreaction on the downside we've seen, especially in a sector like financials, could get corrected. At least that's the market hope, that's the expectation that I've been able to pick up out there. So we'll see if it works out or not. But, you know, in terms of aggregate levels, we're at an important kind of juncture after the dip and the bounce that we've seen. Just one quick word. You know, the US November consumer price inflation, if it is much higher than expectations, expect that to be a big talking point as we come back next week, because what that will do is it will solidify expectations of a faster, accelerated Fed taper. Right now, the pace of the taper is expected to be about $15 billion a month, but there are some who believe if inflation overshoots, it could be increased to $30 billion a month starting January of 2022, and rate liftoff earlier as well. So those are a couple of things to watch out for. Ajay Srivastava is with us, CEO at Dimensions Corporate Finance Services. Ajay, great to have you here. Thank you very much for your time. Near term, after the dip and the bounce, how are things looking?
Well, I think I'll put one word: relief. This weekend, I think most investors will go back much more relieved than they were the last 2 months or so, because it's been a nightmarish correction post the October high, and therefore I think there will be it's kind of a just stable, quiet weekend for ponder over what to do. You said FIs will go away. I wish they go away because they have been relentless sellers in this market. So if they go away, possibly you can see a little better amount of support to the market than we have seen in the past. So, you know, this time it might be a relief if the FIs go away because they are not changing the stance. And the stance is understandable. And I think the stance is understandable that, you know, economic policy, which has indirect taxation as its focus, like Indian oil policy, etc., will lead to fall in consumption. It will come up with a lag. It will come up with a 6-month, 9-month, 1-year lag. But it will show up. That's basic economics 101. And that's what they're looking at. That's why they sold off. And the one sector they've sold off correctly is the banking sector. We have spoken about it a number of times. So I think you will see consumers part of the industry and markets, Prashant, will remain underperformer. And I think they are under the demand cosh on one side. Last quarter, they were on the cost side. Now they'll be under the cosh for the demand because now the slackening demand is starting to show up in the economy. So I think consumer has a problem. Infrastructure, I think, will do really well because that's where the government can intervene directly. But broadly speaking, I think we've got a problem on the consumer side.
Okay, Ajay, hi, this is Reema here. Talking about consumer, ITC was the big mover today, the hot stock of the week, up 6.5%. There is a lot of expectation building into the investor analyst meet taking place next week. Your thoughts on what could come out and will it make the elephant dance?
You just took my words away. I was just about to say I waited for a decade to see this elephant. Forget dance, at least move. You know, I know there's so many memes about the share price of ITC. You know, the point is, unless and until they split this company, unless and until this management team of ITC has to get out and get a fresh team who has got not going to look at this openly, this stock is going to suffer. It's been suffering. You have seen it up and down. It was, 230 even maybe in a month back. So it's come back. It went to 220, come back to 236. So yes, elephants do dance. Sometimes they do, but rarely. But this one peculiarly is a problem is the Mahout who's sitting there on the top because that's what is holding the stock back. Split the company, let the tobacco guys get the dividend out and you enjoy the money just like anywhere in the world. And the consumer company gets rated and the hotel company remains what it is. But I don't think so. That's the management. They're kind of pussyfooting around it. Investors, a lot of them have got this investors in the saying, a lot of them have burnt money, not by saying losses, but the fact that opportunity cost has been very heavy for this investment, this holding. So I would tend to kind of be very, very circumspect if the same management team comes and spins a new story. The restructuring could take 5 more years, and I think I'll get a lot more older in that period. So I think I have better places to park my money than with the management team, which has no interest on equity shareholders. It's just their own interest they have in mind. I have no interest in this stock.
Okay, maybe hopefully things will change. I mean, the announcement that there is a investor meet is a welcome change. Reema, if ITC, you guys called it an elephant, what animal would be Vodafone Idea?
Why don't you go for it first?
I don't know.
Ajay?
Dinosaur. I call it a dinosaur. And the only way it can be revived is on celluloid.
Sorry, what? Only way?
It can be revived is on celluloid.
Well, that's not what the share price seems to be indicating. You know, the low was 4.5 rupees in August. And now, you know, on Friday, we had Vodafone Idea share price closing at about 16.5. So in 4 months, the stock is up, of course, 250%. But, you know, Ajay as well as Prashant, a lot of investor concerns have been addressed in the last 4 months. One, of course, was solvency issue with the company, you know, the government providing cash flow relief, saying there is the 4-year moratorium on all payments which are due to the government. Then the industry took a coordinated price hike of nearly about 20%. Then there are reports that the company has managed to secure funding for the bondholder payments which are due starting from next week all the way till March. That's an amount of close to about 6,000 crore. So the street, Ajay, does seem to be pricing in that this company is going to survive. It's not going to go extinct like a dinosaur.
Well, it's being priced it for the fact that it will be sold. You know, there is no, I think, premise to say that it will survive and thrive. I do not think so at that point of time. The competitive intensity is too high for them to handle it. The kind of migration you've seen it as being intense out of the stock. The punt is that somebody is going to buy the stock. That's one punt. The second punt is that Birlas might have a change of mind and start pumping in the money. That's a second punt in the market, which I know of. The one which is valid is perhaps it will be sold. My only caveat to investors would be, and many times we have done this number of times, is the fact that I would think that Birlas would kind of sell this off even at 1 rupee or 2 rupees a share. Now the things are a little better, maybe 3-4 rupees a share. I very much doubt as promoters they would like to fund this company and keep it, compete with Airtel in the market. I think that's a long shot. So the punt is, will this company now be sold, and so will one of the two guys buy it? And I think or a PE fund comes and buys it. That's a real punt on this stock. Well, funny things have happened, but who knows? But, you know, what the hell? People look at it and say, what am I putting in? 12 bucks a share, what worse can happen? I lose 12 bucks. But that's a different matter. It could be 1 crore comprising of 12 bucks shares.
How mean, Ajay? I'm just joking. Okay. Let's look at, I mean, since we're talking about stocks with triggers and what could happen, right? What if? Lots of what ifs. So we've talked about Z, we've talked about we've talked about Vodafone Idea and ITC. Let's talk about Z. So that was up about 6% or so. And of course, lots of news flow swirling around this as well, that perhaps there will be a deal with Sony, which will now take place after all that battle with Invesco. Nupur is here with a quick roundup. Nupur.
Well, absolutely. Z is in the focus on the back of its deal with Sony getting close to stitching up. This week, in fact, we broke a piece of news that Invesco likely to back Z-Sony deal if promoter stake stays at 4%. Post-merger, Z and Sony will become the largest media entertainment player in the country. Additionally, TRAI has sought suggestions to improve the ease of doing business for broadcaster for a consultation paper by 5th of next month. Edelweiss, in fact, had put out a note saying that most of the institutional investors will back Sony deal and merger is expected sooner than later. Edelweiss ad revenue data shows good trajectory. They have a buy rating with a target of 428 being aggressive on the street as corporate governance concerns will get addressed. Stock is up over 6% this week, up over 14% so far this month, and now trades at 17 times 1 year forward compared to 9 to 10 times before this deal announcement. Back to you.
Elephant, dinosaur, what about this one?
This one is a sparkling candidate, I think, for a revival. I think it's a great way to go to the global story. And I think with the deep pockets of Sony, except the problem with the Japanese is that they have such a long-term vision of making money that as an investor, you could be waiting for a long time. And that you've seen a lot of Japanese stock, except Maruti of late, also has been disappointed. But apart from that, very rare that you find a Japanese stock has given great returns to shareholders. And not only here, locally, it's also the story is globally. So while there will be euphoria in terms of if the merger comes through, let's see what the ratio is, what we get to the shareholding at the end of the day. But I think it's kind of stuff that markets are made of is that you speculate and say a merger will happen, and you find a guy who will buy a stock at a higher price closer to the merger, and then you sell out before the real merger happens. I think that's the story here, Z. A lot of institutions are going to be there in this company who's going to sell out just before the merger is going to take place. So I think there's a story there, interesting story. Whether it's an investment story, I doubt it, but a good speculative story says that you might make good money just around the merger announcement.
Ajay, always good speaking with you. Enjoy your weekend. Thank you very much for joining us on CNBC TV 18. We'll slip into a break on that note. On the other side, we'll get chatting with Jay Bala of cashthechaos.com. Stay tuned.
Come and see treasures yet unseen. Listen to tales untold. Fall in love with flavors from the past. Share memories you'll never forget. And feel a welcome you've never felt. Welcome to a journey you've never imagined. Welcome to Arabia, Saudi.
झूलता उछलता है दौड़ता कभी कभी दौड़ कर आता है आगे आगे बढ़ता है इंडिया अमूल दूध पीता है इंडिया
Storyboard 18 and Twitter present Best of Tweets 2021. Brands leading the way.
It is always a pleasure to take a moment and look back at the year, especially through the lens of business and creativity. Millions of conversations happen on Twitter and in India every day. These conversations enable us to look into consumer insights, pattern, and actually prepare what we call as insights for brands to leverage.
News is about stories. Stories that matter to you and to me. With the biggest newsmakers and the most in-depth analysis, we cut through the clutter and get down to the brass tacks.
Brass Tacks, weeknights at 8:57 on CNN News 18.
What is money? How much money should a nation create? Who benefits from too much money? And who benefits from too little? How much should money cost? Who should allocate money? And on what values? Every week, we seek answers to these questions with the best minds. Indianomics, the show that questions the politics of economics at these times.
There are several listed companies in distress with little hopes of turnaround. Steer clear of such counters no matter what the whispers are. These flying rockets will descend as swiftly.
Tune into CNBC-TV18 every day as we help you safeguard your money and invest wisely with our Investor Safety Initiative. It's been 5 years of indomitable leadership in bringing you the largest M&A deals in the world of business.
It's been an exciting journey from covering the top trends on the deal street to decoding deal dynamics.
5 successful years of catching your attention with the biggest deal makers.
The biggest challenge has always been to find what's going to be the next big deal. Not just in terms of transactions, but even the hottest topics, winning moves, and even deal-making strategies straight from the inner circle.
5 years of delivering the deepest insights and the emerging trends ahead of the curve. Big deal at these times.
Embodying legacy, redefining credibility. Care Edge is where foresight is backed by expert insights.
This is CNBC TV18 Newsroom, powered by Ebix Cash.
Welcome back. You're tuned in to Taking Stock on CNBC-TV18, where we take a look back at the week gone by and prepare you for the coming week. We're now joined by Jay Bala of cashthechaos.com to talk about the market technicals from here on. Jay, hi. We seem to have made a double bottom around that 16,800 mark. Does that give you the confidence that perhaps we've put in the worst, at least for now, in terms of technical levels? And what is the way forward, according to you?
I wouldn't think so, Rima. I think the market is. I would think the market is actually making a counter trend bounce, and I think this bounce would probably end around just under 17,900, maybe shallower than that. And once that's done, probably by Monday, Tuesday, this bounce should get over. I'm anticipating a lower low for the markets. But it's not all over for the bulls, but Reliance is the key stock here. As long as Reliance stays about 2274, there is a small possibility for the bull case. But I tend to lean on the bearish side. But I'm aware of where the trigger points is. If the markets stay strong beyond Monday, I would have to revisit that thesis.
Okay, fair enough. Are you expecting a dip in global equities as well, Jay?
That's right, Prashant. There is an important time resistance the S&P has met. Actually, if you count the number of days from the dot-com high, it's exactly 89 square days, which is 89 is a Fibonacci number, and squares are important in gun analysis. So, the high that the US S&P made in November has met a time resistance even from the 2009 low. But the structure for the Dow is actually slightly different from the S&P. So there's a little bit of doubt creeping in. But I think the European indices, Brent, Bitcoin, everything, which are showing risk-off tendencies. So I would think this is the start of a large correction. Subject to markets going to lower lows. I think you spoke earlier about inflation expectations. I think the economic data today would I think if technicals are to point early, I think it will point to inflationary pressures, and I'm expecting low lows ahead for the markets. And watch out, the most important macro ahead is the dollar index. If 98.27 on the dollar index spot gets taken out, or 1.148 on the euro spot gets taken out, I think we are in for a big move on the dollar, but that's subject to evaluation later on. But right now, my projection is that the dollar will stay somewhere close to 98 and slightly below that, but not beyond that. But if it does get taken out, we are looking at something huge for the markets.
Jay, does the Nifty Bank continue with its underperformance in your hypothesis?
That's right. Thanks to no contribution from HDFC Bank and Axis or underperformance from those two, I think as long as the banking index stays below 38,426, I think lower lows are coming. It's much weaker than the Nifty. And I think the November 29th low it made, I think that's likely to get taken out. The main drop or the drag for the overall market is coming from the banking index. So, definitely long should be avoided here, and should be, if you're going long there, it should be just a trading bet.
You got individual ideas as well. These are positional trades. Why don't you run us through them, Jay?
That's right. That's right, Prashant. Besides the stocks that I'm going to talk about, you might want to be aware of dollar sensitives and rupee sensitives. The decks are clear for a record low for the rupee. And so basically strength for the dollar. So watch out for that theme there. Besides that, I have identified a couple. Basically, Havells is looking negative from current levels. It's clocked a lower low, and I think it's set for much lower levels. Obviously, positional trade. Look for a drop towards 1,200 to 1150, possibly even 1,000. But place a stop above 1430. The trade gets invalidated above that, and besides media, which has been buzz on Friday, we've got real estate stocks trying to make fresh swing highs. So watch out for it. DLF is looking attractive at current levels. So a stop below 375, possibly record highs to 465 to 490. But you should not get too over aggressive here. better off staying in cash rather than derivatives. And that way it's an automatic way to reduce your positioning. And I also like Reliance Industrial Infrastructure at current levels, possibly going to record highs. But the risk reward is not attractive here. So these are the themes I'm watching for the next week.
Okay. But overall, lower lows is what Jay is expecting. Jay, thank you very much for your time. Great to speak with you here on CNBC-TV18. Rima.
Well, with that, it's a wrap for the week. Thank you for watching. We'll be back next week, but stay tuned to CNBC-TV18.
This is the place where ideas can change